Good evening, everybody. Tonight we have Dr. Dolf Roos and Machiel Lucas talking about Buyers Tour 13 and in particular about mandates. Hope you enjoy.
So what do you suggest, Machiel? Should we get started on the actual core of what we're here to talk about?
I think so, Dolf. On the screen, ladies and gentlemen, we've got a bit of an outline of what we're going to touch on. We really would like to make this more of a discussion than simply following slides, and really just talk and have a bit of interaction. During this presentation and discussion, we're also going to ask you some questions. So we are monitoring this actually with 3 computer screens. So please, if you have a question, type it down there. We're also going to have some polls. So please be as interactive as you can. We've got a very, very large audience tonight. So obviously we can't allow voice, but technology has made it possible that you can write questions. We're going to monitor it. And Dolf, as you go, we will be able to feed you some questions and answers. And of course, you can wove it into your discussion as well.
Right. Well, as always, I'm a bit of a maverick, so I'm going to change the order a bit, because the first thing I want to remind you of is that, as we were talking a moment ago with smartphone technology, it's now becoming possible, perhaps for the first generation ever, to invest globally without having to catch a steamer ferry to get somewhere. So you now have the opportunity to invest just about anywhere in the world. And I know on this call, many are listening in from South Africa. You've got your own special set of reasons why you might want to consider investing abroad. It might be to preserve the value of your capital so that it's not necessarily tied to a currency which many expect might not perform that well. And for some people, they want to get their money out of the clasp of what they think is a repressive government, or what could become a repressive government. And by repressive, I just mean as far as currencies are concerned. If exchange rate controls are introduced, that could be a good reason to go. So there are many reasons why people might want to expatriate their money. And what we want to talk about is, why would people want to bring their money into the United States as opposed to other countries? And of course, there are many investment destinations, and some of them are very good. In fact, Wealth Migrate is almost agnostic, but we call a spade a spade. So we will point out the advantages of investing in Australia or the UK or other places. But specifically, we're talking about the United States now. And whichever way you look at it, the United States still is the largest economy in the world. China is rapidly increasing its size, but the very interesting thing is that there are more Chinese nationals looking at investing in the US than there are US residents looking at investing in China. And that gives you an idea of general market sentiment. So I think that is something to take into consideration. If we look at point 4 here, the risks of the US market, some of you, I'm sure, will have heard, and that's why I want to address it. You will have heard that there are many economists who are now saying that there's doom and gloom in the United States, and that by the end of this year, we're going to see turmoil on an unprecedented scale. And I just want to touch on that, because we often get these comments from economists. And remember, they are always hawking their products. That is why you should buy my book on how to future-proof yourself, or how to avoid this catastrophe or whatever. And what I find is, an economist might predict for 10 straight years that there's doom and gloom coming. And then eventually there is doom and gloom, not because of his predictions, but because of natural market forces. And he says, see, I was right. That's why you should have been following me all along. I also met last week with an economist who said that here in the United States, we're at the beginning of a 17-year upward swing cycle, and that all this talk of doom and gloom is just making things better for those people who are willing to take action. So that's my response to that. The other thing I'll say is that I've done studies of the economics of investing, and I have not found a 10-year period in U.S. history where at the end of 10 years prices were lower than at the beginning. So yes, we've just had this big downturn, the GFC, the global financial crisis, as it's often called. And yes, it did affect people in a dramatic way, especially here in Phoenix. It came down dramatically. But what was happening is that it's turned around again. Even here in Phoenix, where we saw price reductions of up to 60% in areas. Oh my gosh, now it's gone the other way. Prices are already higher in most parts of the city compared with where they were in 2008, and we haven't even reached that 10-year mark. So I'm not too concerned about it. So another point that I really want to raise here is that we're looking at a country as a whole. This is national statistics where, we came down with the global financial crisis and now they've come back up. But one of the tenets of real estate investing is that it's so easy to beat the average in a way, folks, that I don't believe you can beat the average in any other investment sector. If you were to ask someone, how would you beat the average on futures contracts or options or certificates of deposits or treasury bills, I think it's very difficult to come up with a theory that has stood the test of time. But there are theories that you can come up with, that I've come up with, on how to beat the average in real estate. And this isn't the platform to go over it, but I don't want to just mention it on a cover. So one is to just invest in areas that have higher growth than the national average. In any country, you'll always have a national average, here in the States as well. And the national average includes some cities where they had a steel mill that has since closed down. And the steel mill was the biggest industry in that city, and it employed 80% of the workers. And since it closed down, the unemployment rate has gone up to 40%, and people are leaving the town in droves, and therefore real estate prices there are suppressed. The national average real estate growth figures includes those towns. And for the national average to be what it is, with these towns that are underperforming and real estate values may in fact be going down there, it means that there are other towns and cities where they are above average. And now I know you have that on the share market too, but which company is performing above average versus which company performs below average tends to change very quickly. It might change month by month. Sometimes it changes week by week. But my contention is that with property, with real estate, these changes are extraordinarily slow. They're so slow that you and I can observe them and invest according to them and benefit from them. So that's where we come to point one, which is, why are we so bullish on the Texas and Georgia markets? And the reason is that historically, these have shown a growth rate which is not a little bit above the national average, it's way above the national average. And because real estate tends to have trends that change so slowly, I've got every expectation that this will continue. So if you were to invest in the United States, why would you not invest in an area that's got higher than average growth? It sounds intuitive, right? And yet I find so many people who fall for other tempting reasons to invest. I know a lot of people invested in the Detroit area because house prices were so cheap. Well, of course they were cheap there. Everyone was leaving town. You could buy a house for $7,000, but then you have to find a tenant. So because Texas and Georgia have strong population growth, therefore they've got strong growth in capital values, it also resulted in there being a good demand for tenant space. So we can give you some of the stats. I'd prefer you look them up yourself and find out for yourself while it's true. But just to give you one example, Toyota has decided to relocate its entire U.S. headquarters, I'm not even sure where they were, I think they were in California, into the Texas region. It's the Dallas region of Texas. It's an area right by Frisco. That is huge. The number of employees that they're going to take on board is measured in the tens of thousands. This is big. Mercedes-Benz, Machiel, have they gone to the Atlanta area?
Yeah,
it's either Atlanta or...
Yeah, Dolf, we actually saw that in the south side of Atlanta. The city of Atlanta is so pro-business, they actually increased the highway for about 3 miles with the extra lane to accommodate not only Mercedes-Benz, but also the Hyundai factory. So yes, they have located down south of Atlanta.
Yes, and there are so many of these big companies that are relocating to these areas. The growth just as a result of those items alone is going to be phenomenal. So when we, look at areas and when we decide...
Dolf, I just want to add something here for our South African audience. One of the key things over here is in both Texas and in Georgia, the greater Georgia area, these states are renowned for what we call at-will work principles. What that effectively means is that you are able to hire and fire workforce as your business need grows. It means that there's also a lower amount of unionizing in those areas. And what's fascinating for me is the less unionized the areas are, the more the business is growing. So from a South African perspective, we have just had the complete opposite, and we can see how detrimental it is to business. And I think that is something for me as a South African, when we travel, that is something that's quite visible.
Well, it's interesting you mentioned that, because I was living in New Zealand back when they had high unionization there, and in 1984 they had a radical government change and they got rid of unions. They outlawed them, and there was, of course, blood on the street, so to speak. But within a few years, we went from the economy, which was the 36th in the OECD rankings, to #1 in terms of port efficiencies, and everyone ended up making more money. So there are good reasons why these things are appealing to companies in America, and that is why so many companies are relocating in Atlanta, Georgia, and in that Dallas region of Texas, and in Austin, Texas as well, and to a lesser extent in Houston and some other parts of Texas. Tax rates are very good. Some of them don't have a state income tax. They still have federal tax, but not having a state income tax is huge. And not only that, but many city governments are offering tax incentives to relocate there. It might be a property tax waiver for 5 years or 10 years. So these are proactively seeking companies to move there, and companies are in fact doing it. The population is exploding at a much higher rate than in other regions. In some parts of the country it's going down, in some parts the growth is there but it's low. But in Texas and Georgia it's very high. So that's why we favor those places. What I want to do now is talk a little bit about the relative merits of residential and commercial and medical. And most people, when they start off in real estate, they think in terms of residential property. And the reasons are obvious. If you go to a house and there's no roof on this house, or there's a front door that's missing, or there's no kitchen, you'll notice that and you'll say, well, I can't buy this because I'd never be able to rent it out. It's got no roof or it's got no kitchen. Whereas for most of us, if we look at a commercial property, or if we look at a specialist commercial like medical, we're not sure what to look for. We feel as though we're out of our depth and we lose confidence in the deal. And that's why most people resort to residential investment. By the way, there's nothing wrong with residential investment. I think, I've written about 15 books on real estate. 12 or 13 of them are on residential. It's a very good investment. But the reasons why it's good are simply because people don't know any alternatives. We encourage residential investment. It's a good way for people to start. And when you have your second property, residential is good. Even your third property, residential is good. But I would say this, if someone's got 50 properties and they're all residential, they need to start expanding a little bit, because as you build your portfolio and hopefully as you build up your equity base, it starts to make sense to venture out. So commercial property seems a bit more tricky. It's not really. You just have to learn a few extra words, but they don't take 8 years of study to master. You just have to learn a few extra words, and then you'll get the sense of why commercial is so good. And I want to give you a couple of examples. This is not the forum to explain it. Heavens, I've written an entire textbook on commercial property, and I've got a 12 CD course on it. We don't have time here, but just to give you an example, with residential property, the average lease length tends to be about a year. Occasionally it's 2 years. Often when that rolls around, it goes to month. Whereas with commercial, you tend to sign tenants up for certainly 5 years. Shops tend to be a bit shorter, 3 years, sometimes 2 years, but most commercial premises are 5 years. Sometimes they're 10 years. In the city of London, for instance, commercial lease lengths used to be 25 years. They've come down a bit. So that's good. You've got a much longer security of tenancy. A second point is that they tend to pay the outgoings, whereas on residential, you, the landlord, have to pay the outgoings, the property taxes and things. So residential, though, has so many great advantages because there are so many more residential properties than commercial properties when you look at a city. So what we do when we bring people along to look at deals is typically we show them a whole swag of residential properties so that they get a feel for what's good and what's not. Now, as I said, the Texas and Georgia regions are growing faster than the national average, but within states you also have that. So we have found that in the state of Georgia, for instance, Atlanta has a huge rate, and I think shortly we'll go into some of the reasons why Atlanta has it. Look, it's got a metro population of around 6 million people. That is bigger than many countries. Where I come from, New Zealand, it's only got 4 million people. So here we've got a city. The metro area of Atlanta is 1.5 times the population of New Zealand. That says a whole lot of things. So it happens to be in one of the top cities in terms of population growth. The center's got a very large GDP hub. So in other words, it generates a lot of income in that area because it's got so many Fortune 500 companies operating there. They have their headquarters there. Here's a very interesting stat that most people don't realize. Atlanta's airport is the world's busiest. Now, there are many ways of measuring how busy it is. Is it passenger movement? Is it cargo movement? Is it plane movements? Is it takeoffs, or is it landings, or a combination? But it is always up there. In fact, sometimes it can be a bit daunting if you have to transit through Atlanta. Getting from one terminal of the airport to another, you need to be pretty fit to get there or get one of those electric cars. But these are stats that are astounding. It's also one of the fastest and busiest ports in North America via Savannah and the Brunswick ports. I mean, that aids this whole fact that it's growing at a phenomenal rate. And it's a hub of business and logistics for the entire southeastern United States. Here's another interesting stats. There are many colleges, of course, in America, hundreds of them. But it's got something like 25 highly ranked colleges and universities are there. So anyway, one of the largest economies, it's the 11th largest economy in the world today. That is, well, we're talking about Texas now. That is phenomenal. In fact, you may have heard that California surpassed France as the world's 6th largest economy about 3 years ago. This is phenomenal when you think about it. France is an independent nation, about 57 million residents in France, and this little state of California, which I think is an area that's a bit smaller, its economy surpassed it. Well, when you look at this, Texas, the economy of Texas is now the 11th largest economy in the world. This is on a national ranking. That is huge. Unemployment rate is very low. That's another thing you might ask yourself. If many people are moving to Texas, maybe they moved there for whatever reason, but they can't find work. No, the unemployment rate in Texas is lower than the national average. The Houston metro area is expected to add 63,000 jobs. This is last year in 2015. It is just, it's phenomenal. The Dallas metro economy is the 6th largest in the United States. They've got huge job growth there as well. We mentioned Toyota is moving there. I believe Morgan Stanley has moved there. All these big names, they're moving out of what used to be their standard places of employment. A lot of the financial world was either in New York or San Francisco. They're leaving there. The cost of living in both New York and San Francisco is through the roof. It's hard to recruit people there. It's difficult to organize meetings because it's difficult to commute. So they're all thinking, where should we go? And they're going to these places where people prefer to be. And then San Antonio is the 7th most populated city in the United States. Most people haven't heard of San Antonio. They hardly go there. These stats speak for themselves, and they will just continue going. Machiel, perhaps you can give a comment. You studied at Atlanta for a while, or north of Atlanta.
Yeah.
You must have seen change since the days you were a student, not highlighting how many years ago that was, but you've seen change.
Yeah, very much so. Dolf, maybe just a quick one on the Texas, which is on a lighter note. Texas is a very proud state, and from an outsider perspective, they're the only state which fly the Lone Star flag at the same height as the national flag. Just on a lighter note. But on a more serious note, we have seen unbelievable medical research in the state of Texas. I was personally now 3 times in the lower end of Houston. Most people think of Houston in terms of the space control center, and also obviously the oil and energy headquarters of the world. But what's not really mentioned is pretty much, I think, the largest, or at least in the top 5 medical research areas of that city. Is just unbelievable, the medical research that's happening there, all the campuses, etc. It's like a complete half of the city, the south side of Houston. So that's very interesting. And then also San Antonio is for the military. There's 5 military bases there, and it's actually the research center for burns. Of course, the casualties of war, but it's just fascinating. And we've been asking now, why is it that medicals is so attractive in Texas? And one of the things that we realized is that they have capped the medical malpractice insurance Maybe you can just allude to that, what that means, and why is it so important?
Well, sure, medical malpractice insurance is an insurance doctors have to have here because this is a sue-happy state. It's a country. We litigate here at the drop of a hat. It's an almost unfortunate thing. But because of litigation, doctors have to have this insurance. And some states are more friendly to this, and others are saying this is getting ridiculous. So in some states, like Nevada, for instance, the insurance premiums for doctors to have their medical malpractice insurance are so high that many doctors are even leaving the state for that reason, or they're just not practicing medicine anymore. So when you have favorable insurances in states, it encourages many of these people to operate in these areas.
Oh, thank you, Dolf. What I would like to do now, Dolf, is maybe just go a little bit into the actual partners that we have. The trip that we're going to plan is the residential side. As you can see on the screen here, we intended later this month. For those that don't know, we pretty much try to do these trips 3 times a year, sometimes 4 times in a year, and it's really something that you should consider. So what we want to do is, on these type of trips, we really would like to introduce our local partners. I think one of the key value add that we as Wealth Migrate are doing is actually establishing these partners on the ground. The last time we were in Dallas, we met this John Larson. They are a turnkey operator that operates between Dallas, Austin, and Houston and San Antonio. And what we found, they were really a upper end type of turnkey operator in the residential space. They focus on what we call A-class tenant. For those of you that's in South Africa, we just had the breakfast tour with John Larson and his business partner Taylor came out, and we actually met them firsthand and we introduced them to everybody. So from that perspective, we found a very top-notch turnkey operator here. And for us, it was extremely important that we actually break into the Texas market, and I'm very happy to say that we've done it. The price ranges are typically in the region of about $150,000 to about $190,000 type of price ranges, and I can assure you, I've been now in the Dallas area with John in the houses. It is as good as we have been used to in the Atlanta area. So I'm very happy with that, and we also have got a actual very nice website where clients can actually log in. We've got about a stock of about 95 houses at the moment. So from that perspective, this is something that really was introduced by us earlier this year. When we go to our partner in Atlanta, most of you know RJ Pilano. He's continued to produce some very nice properties for us. The market in Atlanta are getting a little bit tougher, so I can just tell you my personal experience in Atlanta has been absolutely fantastic. We've got houses there, and we had seen phenomenal growth. And all I'm asking, if anybody is still interested in Atlanta, really the window of opportunity is starting to close. Some of those that follow us as asset managers, every now and then we actually have to almost wait until we find a good property because they go so quickly. So Atlanta is continuing to be a star performer, and all the cities that I'm mentioning are in the top 10 growth cities in America. So from our perspective, both on the residential and on the commercial side, we're extremely happy with that. And then going to our other partners, we still see there's some value in Memphis, and we recently added also Nashville. If you look at the research that we did top down in America, we've basically seen the southeast side of America is pretty much a growth area. That means that just north of just north of Georgia is Tennessee, in which Nashville and Memphis is in. States around that is also North Carolina, South Carolina, Raleigh, and Charlottesville. We're starting to look at those opportunities as well. And then south of this is Georgia. So from that perspective, it is pretty clear. I think in both of these states, we have seen that specifically a little bit north of Texas, there's also quite a lot of, let's say, hurricanes and tornadoes. We have some of that in the south side, specifically in the Florida area. Atlanta area hasn't been hit by that, and also in terms of Texas. So sometimes we get a question about the natural disasters. From our perspective, it's a fairly lower risk in the areas that we are. However, we do treat them in terms of insurance. So part and parcel of your normal household or house insurance on these properties, they cater for these natural disasters, and it's actually very clear and what they cover. So from that perspective, the adverse weather conditions from our perspective is not such an influence, because we're completely covered by the insurance. Yeah, so Dolf, I think that was just a quick view on our partners, which is our key strength. I will allude to a little bit on our commercial side as well, just later on. Similar, we really focus on building these relationships, and because we are there every 3 to 4 months, we have a very nice continuity with these partners. Maybe you can just allude a little bit to what is a buyer's trip, and also the special options that we offer to clients.
Right, and I just want to comment on our partners, that these aren't just people chosen at random. Oh, you're in real estate, you'll do. Collectively, we've spent decades over here, and these are people that we have filtered through the system, and they've stood the test of time. They've shown that they can perform. They consistently give us good advice. So we just want you to know that when you join us on these tours, we're not just fitting people into to give you people to talk with. These are people that are experts in the field, and that we rely on and that we trust. So these tours are very interesting, because there's nothing like being on the ground and seeing what it's all about. Until you leave the comfort of your own home and you venture out to another country and you see what's actually going on there, and you realize that there's a whole different world, there's a different way of transacting properties. Until you realize that, you sort of wonder, is this all for real? Is it all as good as it's made out to be? So there's nothing like coming. So there are a couple of things. How much does it cost? Well, you can reserve a seat with a down payment of 5,000 rands. And once you've indicated your interest, one of our global asset managers will contact you with a more detailed breakdown of the cost. Do you need a visa? Well, yes, if you're a South African citizen with a local passport, you'll need to apply for a visa. But it's a quick and easy progress, and we'll help you do that. How many people are on each trip? We limit it to 10. This makes it, we get to know everyone by name. You like there being other people, because now you get a cross-pollination of ideas. So, you may not have thought of something, but one of the other people say, what about this? And how about that? Can we do this to it? So, but 10 is a good manageable group, and often it's a bit fewer than 10. It might be 5 or 6, but we limit it to 10 at a time. And, what is required? Well, you have to have all of your own affairs in order for on a trip, so that if you've identified a property, you know that you can pull the trigger. And we can help you through that process as well. But remember, at the beginning of this call, I was talking about how this smartphone technology and technology in general has changed the world for us. It has absolutely changed us. So yes, one of the ways you can participate is to come on one of these tours, and I can assure you that the most common feedback we get back, apart from the fact that they end up doing good deals, is that they enjoy it. They're actually fun. It's not a burdensome thing, oh, I better do this now to look after my finances, but I can't wait to get back home and have some fun. It's the other way around. We make them fun, because if you love what you do, you'll never work another day in your life. That's the attitude you've got to have. So yes, you come on one of these tours, you have a lot of fun, you learn you meet a lot of interesting people, and if you want, you walk away with one of these investments. But we're expanding that because not everyone has got the time to come on one of these tours. You might have commitments at home with either family or with work, and not everyone has the money, or even if you do have the money, you'd rather put it towards a property than putting it towards coming on one of these trips. I mean, there are airfares and accommodation and meals and everything else that goes with it. So what we're doing is we're starting the concept of these virtual buyers trips. When we're doing the actual tour with whomever decides to come along, we can send you video clips and tweets and photos of what we're coming across and what we're finding. And we've had great traction with this. This has been one of the most sensational things that we've come up with that people really enjoy doing. So we have this ability for you to see what's going on. We give you live video feeds, and you're in a different time zone there. South Africa is 9 hours ahead of where I am in Phoenix right now. We've just gone to summertime in America, even though Arizona isn't on summertime. So it's probably 6 hours ahead relative to Atlanta. So if you cannot join us, you can still benefit. You can come on a virtual tour where you can get all the live feeds, or if it's a different time zone for you, you get the delayed feed. You can see the properties we're coming across. And then if you've given us a mandate, we can go ahead and buy a property as if you were there on the trip. So it raises the question, what is a mandate? Well, a mandate is essentially an authority that you give us that if we meet certain criteria that you have to approve, and then we show you the property involved. It's as if you're there. It's virtual, remember. You get the photos and the videos that you can go ahead and pull the trigger and still acquire the property as if you were there. And Machiel, do you want to add how this works? Because we're both very excited by this whole concept.
Yeah, I think from my perspective, when I started out my journey investing overseas, I think one of the biggest thing is for me really to take that leap of faith. And I found quite a few of clients that I interface with that really just need that last push to actually do it. And I can tell you that once you have just come with us, you would really be able to see what we all talk about, and that really just gives you that confidence that for a lot of people this type of money is large money, and you really want to know where you're going to spend it. So those people that join us on the tours obviously will get first opportunities and the best opportunities. So that is their reward for coming with us. So our partners prepare for us special deals, and when we go on these tours, the people that is on the tours with us have the option to select. It's not mandatory that you must buy one, but if you buy one, your 5,000 Rand will be refunded for you. And really it basically means that you just pay for your actual flying cost, and you can then actually walk into the house that you're going to buy. And that's nothing as nice to see what you are going to buy, and you can actually close it. And the process is so efficient. If you're going to buy cash, you can actually have the house in a week, which is something strange for most South Africans. And then once the guys that has been on the trip got their first choice, then the next preference we give is to the people that give us mandate. And so if you give us mandate, then obviously you would have the next choice. But we have husband and wives that just goes along for the ride, and we have people that actually have now done 3 or 4 buyers trips with us. So what I can say to you, you don't have to buy. We have people that just want to stake out what's happening in the United States, and then perhaps they have a private transaction that's only coming down the line, say 6 or 7 months, and they're just preparing for that transaction. So yeah, there's no reason that you have to buy, but I must be honest with you, when you're there, my experience is normally people tell me in front they're going to buy one house, and then halfway through the tour they start going a little bit off and trying to make plans, and by the end of the tour they most probably buy 2 houses, because it's really actually something special, and the houses that we get is really proper investment houses, and you really feel that if you own that, you've got something worthwhile. And our mindset is obviously 5 to 10 years, and so it's not a short-term thing. We're not buying just quick and easy properties. We really buy in the areas. We know the areas where to buy, the schools where we need to look at, and all of these things we take in. So it really gives you a good overview. Yeah. So I can only recommend it.
Well, thank you, Machiel. And while we're at it, I encourage everyone to, if you have any questions that come to mind, type them in the little box on your screen, because then we can look at them and either answer them all at the end, or if they come up and they're relevant, I might take them as they come along. So feel free, for this to be interactive as well, feel free to pose any questions you have. And Machiel, I fully agree with you that there's nothing quite like being on a tour, because you get to smell it and taste it and feel it, and just you get to sense this growth. Right now, when you hear about the phenomenal growth in Atlanta or in Dallas, you understand it academically, you know what that means, that means a lot of people are moving in, but it's only when you're there on the ground that you see all the moving trucks rumbling across the roads. You see the concrete mixers, rows and rows of concrete mixers going off to some suburb to put in the foundations for 240 homes that they're building in one division. It's when you see this time and time again that you realize this truly is happening, and it becomes infectious. So that's the advantage of being on the tour, and I strongly encourage you to come on a tour if you've never done so, just to see what it's like. But having said that, if for whatever reason you can't make a tour, consider doing the mandate, because this way it's almost like being there. And with technology, it's changed. Remember, my parents' generation had to send letters to Indonesia. It took 3 months for a round trip. And now we can talk with this video link almost, well, it's free of charge. It's whatever the internet connection costs you. So I'm very excited by it. You can participate in this tour by not physically being there, but by seeing our video feed and our videos and our photos. Those who come on the tour, as Machiel said, they get first dibs. But, usually we have dozens and dozens of houses available. And if we only have 5 people on the tour, that means there are a lot of houses available. So by having a mandate, you can be next in line to acquire whatever it is you want to acquire. I think this is the way to go, and it's the way of the future. You see this whole virtual reality thing is taking off. All the big tech companies are making their virtual reality goggles, and what we're giving you with little videos that you either watch on a computer or on your smartphone or a tablet maybe, it's so primitive compared with what you could get. Can you imagine putting on a headset and sitting where you are in South Africa, and then we've got this camera rig out in Dallas, for instance, and as you turn your head, you can see what would be around you had you been in Dallas yourself. I mean, it's getting very close to that point.
Yeah.
And another point in case is this webinar we're doing now. It wouldn't have been possible 20 years ago. So the world is changing, and I always say there are 3 kinds of people. There are those who make things happen, there are those who watch things happen, and then there are those who wonder what happened. And you've got to make sure you're in the right category so that you don't regret it later. They say when we're old, Machiel, we I don't know why I mentioned your name of that, but I'm handing back to you shortly. But when we get old, we don't regret the things that we did that we shouldn't have done. We regret the things that we didn't do that we could have done. So we just want to avoid, as Machiel was saying a moment ago, he started this process, 3 years ago, but he could have done it 6 months earlier. And now realizing, you're happy you did it when you did it, but, you should have started sooner or could have. So I want you, the listener, to realize that here's an opportunity. We're trying to make it really easy for you to get a good feel of what's going on. And by the way, a mandate isn't a commitment to buy something. It just shows that you're ready to pull the trigger if you find something that meets your criteria. Yeah. Machiel, sorry, I cut you off before.
No, I just would like to allude to some questions that we see coming up. From our perspective at the moment is when you deal with residential property in America, we definitely recommend that you set up an LLC. So that is really what is needed before you go, if possible. Normally it takes about 2 weeks to get it done. Normally we set up an LLC with a husband and wife team, and then we actually open a bank account for you, and we get you the relevant tax numbers, etc. And it's really a process that we do in parallel. And I think one of the things that is a difference between the commercial properties and the residential property, they tend to be more individual investments. So I think for people that has got a very independent mindset and they really would like to do their own thing, there's nothing wrong with it. Residential is really a way to do that. When we go to the commercial side, we can still use an LLC, but we at Wealth Migrate has been really focusing very hard to actually create a platform that you don't need any structure, and you simply go onto the platform, and we've taken care of that complexity. So we're really excited about that, and when you go to our portal, you see our first deals exactly on that basis. The last thing that I think, which a problem that we really still have, is we're really struggling. We basically have done now this year already. We reviewed 10 lenders. The Americans are still very skeptical to lend to South Africans or to foreigners. So at the moment, our loan to value ratio are still in the region of 55 to 60%. Our interest rates in both in Texas and in Atlanta area and in Memphis for that matter is pretty much 8.75 to about 9.75. Myself and the other investor are guinea pigs with new lenders, and we're really testing them now, and we're pushing them to see if we can get better lending rates. So yeah, that's an area that we found where South Africa is much more advanced is the banking system. In terms of the platform, I think it's really a platform where you can invest internationally online. It's pretty much like a stock exchange, and that is why the structure is not needed. It's really going to be done on your behalf. So if you want to know a little bit more about the platform, please type in the question platform and your name, and one of our asset managers will explain that a little bit in detail to you. Let me just have a look. What kind of returns are we talking is one question that I see quite regularly. If I take a property, and I just want to qualify it properly, is I take a property with paying all cash for it, then we basically get two things. We get a gross yield. That means what is the rental income compared to the price of the property you pay before we take off expenses, and then we get something called a net yield of the property, and that's when we have a gross yield, gross income minus the expenses. So in Atlanta area, we at the moment averaging around about 7 to 8% net yields, and our gross yields are in the region of about 12. I would say about 10.5 to 11%. In Texas, we are averaging gross yields very much similar, 10 to 12%, but there the actual net yields are a little bit lower. They're about, I would say, about 6.5 to 7.5%, or roughly a percent lower. But what we have seen at the moment is that the remaining growth potential in terms of capital growth in Texas at this point in time we found is still higher than Atlanta. Memphis and Nashville are pretty much what we call our steady eddy. So they basically get a bit of a higher return, especially if you go into the more B-class properties in those areas. So their returns are a little bit higher. So yeah, I hope that gives a bit of a feel for it. I think the thing that I really advise investors is that they must really not fixate too much about the yields. My example is that, when I started first buying these properties, I procrastinated for 6 months because the rand was at 8.3 instead of 8.8, and I lost a little bit of money because I waited 6 months. But when I look back 3 years, it's now double the exchange rate, and so the 7% or the 7.1% or the 7.356% doesn't actually matter when you look at from a South African perspective over 4 years, and you basically doubled your money. So from that perspective, all I can say is don't delay. The fundamentals in terms of our exchange rate are not changing. Our productivity is worsening against our main import partners, and to quote Kees Bruggeman, which I always use in this discussion, is if the fundamentals of our productivity is not changing, the only way that the country can keep it and maintain its balance of payment is it must weaken the exchange rate. So from our perspective, like for like properties in South Africa and overseas, pretty much the yields and the growth are very similar. but the main thing is the exchange rate, and really the focus is capital preservation. And when you start talking about capital preservation, it's very important that you act, you don't wait. And from our side, we got the philosophy that we would like you to diversify your portfolio, and that's why we're also going to offer opportunities in United Kingdom and Australia, because we like to diversify. At the moment, we believe the opportunity is in the United States, but like everything, it can change. And so from that perspective, when you have this mindset that you are looking at capital preservation, meaning you want to maintain the value of your rand assets, you have no choice but to diverse. And when you talk in that lane, the yields and stuff, even if they're a little bit lower than what you wanted, it doesn't actually matter in the bigger picture. So I hope that gives a bit of a feel for what we do. A nice thing about the American properties is also that they are definitely cash flow positive, contrary to what we do in South Africa, where we do a buy to let. Typically in South Africa, the guys originally have a bit of a negative cash flow, and then they actually subsidize the rent. But what's nice about both Texas, actually all the American properties, we structure the loan to value in such a way that it actually pays for itself. And that from our perspective is very important. And that means that you actually can have a self-sustaining asset, which is quite a nice thing. All right, so I think that's enough on that side. Dolf, anything further on the actual mandates, etc.?
I don't think so. Do we have time to show a few photos of the sorts of deals that they might be able to participate in?
Dolf, we don't have specific examples. I think, Kevin, if you go to the next slide, you will see typical houses. Just show just on that one. These are very typical houses that we're looking at. All of them in America, they call them single family houses. They're all freestanding. Something that the South Africans has to get their mindset around a little bit is the fact that it's made of wood. But in Texas, we found also quite a few, like the one on the right-hand side top is actually bricks. So Texas is a little bit more old style towards what we are used to, but both of them, either wood or bricks, are, these assets are planned to last you at least 15 years, and all the products are guaranteed with at least a year warranty with the new appliances. The roof has got a life of at least 10 years. So we're really positioning these assets for a long-term portfolio growth. And that also brings me to the point that, these are long-term views. And if you've got a positive long-term view of South Africa, then you don't have to diversify. If you are thinking in 5 or 10 years time frames, then whenever you invest overseas, you have to get also the assets that can last that long, because we're really not in the mode of buying and selling. Yeah, so I think, Dolf, that is that. Maybe I could ask you to allude a little bit about on the commercial side. You touched briefly on the differences between commercial and residential. Maybe just follow on with that and maybe explain one or two of the things that we have done.
Well, I'm happy to. It's very interesting with residential. A residential house will sell for the same price whether it's tenanted or whether it's vacant. That's just the fundamental of it. In fact, it might be slightly easier to sell vacant because if there's a tenant there and the potential buyer wants to live in it, he has to wait for the tenant to leave. But with commercial property, typically a commercial property will sell for a multiple of its rental income. That means if it's not fully tenanted, it won't sell for as much as when it is fully tenanted. So one of the medical buildings we bought in the Atlanta region, in fact, it was a cluster of 7 medical buildings. It was only, from memory, 89% leased. And most investors say, that doesn't sound very good, because why would it have vacancy? And if the current owners have had trouble in fact, this is one of the buildings of the 7 here. If the current owners have had trouble getting tenants, then we probably will as well. However, we acquired that property, and we then set about finding a tenant. And there's a whole art and science to getting tenants for a building. And it's one that we don't have time to go into now, but that's one of the things we will talk about in our long drives going from one property we're looking at to another property that we're looking at in Atlanta or in Dallas. And they're the sorts of discussions we have. And in fact, there are so many great things you can do to attract tenants. Before we acquired this property, the day we closed on this property, we in fact had leased it up to 100%, which meant that the value to us was already on day one a lot more than what we paid for it. And these are some of the things that you can do with commercial property that you perhaps cannot do with residential property. It's one of the things I find very exciting. So this one here, as you can see on your screen, it's one of 7 medical office buildings, and it's very close to a medical campus. We expanded it, in fact, within the first year, and we have another development to expand it for the second year of investment. You can see the sorts of numbers involved here, just over 16.5 million to buy it. The equity was just under 6 million. So obviously we had to borrow the rest, and in this case we had minimum investment lumps of 100,000 going in. So some of the people who came on this trip, in fact I remember it, walking around it, looking at it, taking videos of it. A whole bunch of us were there. Scott was there, Machiel, you were there, we had Henny there, we had a whole bunch and a lot of local people on the ground, and we explore these things and look at them and evaluate them to see if they're a good deal. And Machiel, you know the numbers very well, but anyone who participated in this is smiling right now. Is that fair comment?
Yeah, I think to have a consistent around about 8% paid quarterly, it's a phenomenal return. What is not so visible here is we actually had one of the tenants asking us if he can expand our building and pay for it and increase his rent. And as you know, the more income we get from the tenant, the higher the value of the building is. So in this specific instance, this investor has already increased the value of a minimum of $500,000 purely because of the additional, let's call it, space that the tenant added on for us. And over and above that, the capitalization rate, meaning the ratio between the gross income and the building price, has been steadily going down. We bought this at around about almost 7.8 or 8 capitalization rate, and we know that the capitalization rate at the moment in Atlanta is already below 7. That means around about 6.5, 6.8. And in this terms, it basically means that we have already realized at least another $2 million of value on this building. So not only are they getting this income, they actually are creating value. Granted, it's not realized value yet, but it's a good indication of what we can sell it for.
And you know, Machiel, it's very interesting because when many people hear that something's come down, and you mentioned the capitalization rate has come down, most people think, well, that can't be very good. But in this case, when you buy, you want to buy with high cap rates because that means the price of the building is low. And as the cap rates come down by market forces because the economy is improving, the value of the building goes up. And I really want you to understand what this means. We haven't done anything to the rental income. We haven't done anything to the vacancy rate or occupancy rate. We haven't done anything to the lease length. All that's happened is that market forces have changed. The way the market evaluates a building has changed, so that the so-called word cap rates have come down. That means the value of the building has gone up. This is huge. This is one of the great benefits of being with a team who knows when in the cycle to buy and when to sit back and just let things mature. So, you know, there are great things you're touching on, Machiel, and ideally, you know, we'd like another hour just to explain the significance of that alone, because that is phenomenal. That's one of these huge benefits of commercial real estate that most people don't understand. So when we look for buildings, we don't need 100% occupancy. In fact, I don't mind if there's 50% vacancy because I know that we've got a good chance of getting the tenant. And if we're smart about it, we will get an option to buy the property or a contract with some clauses in it. And then we can often find the tenants before we have to commit. That's when it gets very exciting. Oh, great. On the screen now we've got the next one. Machiel, explain a little about this one here.
Yeah, Dolf, this is one that we started to look last year already. The actual seller was a little bit sick. It's an older gentleman, and yeah, he's basically got no debt on this building, and it's in the northern side of Atlanta. It is called the Windy Hill building, and yeah, we have just got it under contract. We're in final negotiations, and we will launch this very soon. I think one of the things that people will know that we have a very stringent due diligence process. And yeah, people might ask, you know, why where's medical for? Yeah, we actually had a project for which we called medical for, and during our due diligence period, the tenant did not stack up to our stringent 140-point due diligence process, and yeah, so from that perspective, deals sometimes do not go through, but we're very comfortable with that because we're really not going to do a deal for the sake of a deal.
Yeah, and Machiel, if I can just interject there, sorry to interrupt, but I want to add to that because it could be tempting for you, the viewer, to think that, you know, we just stumble across all these great deals. No, what you're seeing in front of you now, when we take you on a buyer's tour, when you give us a mandate and we go and look at things, you're not just looking at things at random that we're saying, that seems good, let's do it. You're looking at the tip of the iceberg. We have got teams on the ground, and then we ourselves go through and we look at property after property after property, and many get rejected out of hand, many get rejected after a day's investigation, and just like Medical 4, Machiel, you were here in America. It was, I think it was late January, early February, and we were considering that one then. We had all the documents, and we started the due diligence process. And it's relatively recently, so almost, you know, however long later, almost 8 weeks later, that we finally put the kibosh on that and said we can't go ahead. It doesn't meet our criteria. So I just want to amplify what you're saying and emphasize that by the time you, the client, gets to see a property, it's already gone through this rigorous elimination process. So anything left is likely to be pretty good.
Yeah, Dolf, I think the other thing that is very, very significant about this deal, this is our second deal that we're going to put on the platform. I see a lot of guys are asking about the platform on the questions and answer. I think we had the case where people just come to us and say, listen, I just don't have $100,000. Can't you make a plan that we can do it less? And the main reason why we didn't do it previously for less is that the fixed cost to running an LLC on a yearly basis is in the region of about $2,000. That means that if you get about 8,000 or 8% on your 100,000, you have an $8,000 income less than $2,000, which means about $6,000. But imagine if you only invest $10,000 and you get $800 and you still have to pay $2,000 fixed cost. So this, for a smaller amount of money, the LLC route doesn't pay. So to that extent, we have created this platform. Essentially, it's a company that you invest in, and this company then will invest on your behalf and still have an equity share in these deals. And therefore, you can see at the bottom right-hand corner, we have dropped this investment down now to 15%. So you can still, for the investors that are having the LLCs, you can still do invest through the LLC route. It's the most tax efficient route. But when we go through the platform, you will actually get dividends. And these dividends, we would have paid your tax already on your behalf. So it's a slightly lower return, but it's at least a good start. So we're very, very upbeat about this. And similar, we have also got our first UK deal on the portals for those that want to invest in pounds. And hopefully in the next 2 months, we're working on about 2 Australian developments. We'll have the similar structure. So why we're so excited is that you really would be able to diversify your portfolio without actually opening all these legal structures. So yeah, I'm not going to give away how we do it. This is really something that we worked on for about 6 to 7 months. So please contact your asset manager to do that. So therefore, I think we have solved the costly, not costly, but fairly expensive LLC problems. I think I just want to quickly have a quick look at some of the questions that I've just covered it. Yeah, I think just a question about the rand as well. I think I've alluded to it, that the fundamentals of the rand at the moment maintains a minimum of 10% depreciation, as according to Kees Bruggeman. The potential rand strengthening that we are seeing, of course, we don't have a crystal ball, but these are sentiment issues. So my example that I always use is sometimes the rand goes up, say, to 16, it goes down to 13. But when we look over a 4 to 5 year period, it doesn't actually matter if you bought it at 15 or 16. What matters, it most likely will have really decreased in any case. So when you look back 4 years, the difference between buying now at, say, 16.1 versus 15.5, that differential over a longer period of time, if the fundamentals doesn't change, could just be a difference between 80% change and 90% change. So our advice to everybody, if you are interested in moving your money, just do it as quick as possible. Don't time the market. And the whole idea of diversification is we don't know what's going to happen. Therefore, we encourage a diversification strategy. In terms of tax consequences of investing in commercial, pretty much that's a very detailed topic. We have a lot of advisors that can help you on it, but my main answer to that is that the residential and the commercial tax consequences are pretty much the same. One of the big advantages that we do have is that when we do investment through the LLCs, we can deduct the depreciation, which is really a very nice way of postponing some of your tax. So that's, I think, one of the questions I saw there. Let me just check anything else. Yeah, I think I've covered most of it, Dolf. So I think in this last session, if there's some more questions, please type it for us that we can see and maybe answer it. Dolf, some other questions?
Well, I just want to talk about questions in general, because very often we get a lot of people asking questions during the session, but more often than not, they think of the questions during these calls and they jot them down and then they want to submit them. So what we're working on is an ability for you to submit questions, and then I'll answer them on video. I used to do this in the past. It's called Discussions with Dolf. You simply submit your question by email, and then I get all the emails and I choose one or two every time, and I say, all right, today's question comes from Johan Stephenson out of wherever, Pretoria, and his question is as follows, and then I'll read the question and I'll give my answer. And this proved to be very popular. So we're revamping that, and you'll get details on that as it is launched. In the meantime, we're going to get all the questions that you've submitted today, and we'll pass them around and figure out how we answer them. We might do a group email, or we might put them onto the Discussions with Dolf platform. And in good time, we'll give you an indication as to where you can send your email questions. If you're desperate to have one answered, you could always just send it to info@wealthmigrate.com, although I'll have a specific one for Discussions with Dolf later on. But yes, I can't see the questions right now that have been coming through, but if there are any more, Machiel, there that you think are worthy of sharing with the group, let's do that. And otherwise, we've had more than an hour. I want to honor the fact that many people on this call have given up time with family, or you've delayed dinner or something. So let's try and keep it a bit tight, keep to our time frame. And I hope the message you've got through, though, is a number of things in summary. And then I'll see if there are any questions that you've got that you want to answer, Machiel. But firstly, sometimes it's wise to invest beyond your own borders. And I think you in South Africa know that far more intimately than most people here in the States. I think the United States has the lowest propensity of people investing overseas of the major OECD nations. But you understand this fully. So yes, if you invest overseas, there are many benefits. Then we talked about why the US has tremendous benefits at the moment. For all the complaints from people all over the world, both within the US and outside the US, as to what is wrong with America, there are many more people wanting to move here than there are people wanting to leave. It is still the land of opportunity. It has still got more freedoms than most other places can even imagine to have. So if we realize that we want to invest overseas, we want to invest in the US, then where in the US? Well, find areas that have higher than average growth. And two of those areas, they're not the only ones. We could spend another 2 hours talking about other areas that have higher than average growth. But two of the areas that are particularly good are Georgia and Texas. And within those two states, the Atlanta region is dominant in Georgia. And within Texas, I think it's fair to say that Dallas is at the top of the list. Austin is good. Houston is good. San Antonio is good. And there are other regions that aren't bad as well. But Dallas is hot. So look at doing that. You've got a choice between residential and commercial. Residential has the initial advantage that you will understand what's involved. It's easier to get your head around, and it's easier perhaps to own an entire residential property on your own than it would be to own an entire commercial building on your own. You've got two options in terms of how you want to go about this. You can join us on a physical tour, and there's nothing that takes the place of actually being there and seeing it and smelling it and feeling it. But we've now got an option where you don't absolutely have to be on a tour. If you've been on a tour before, or even if you haven't, you can give us a mandate. You can give us the authority. You still hold full control. You can still veto anything. You can still say no to all of the deals. But if you've given us a mandate and we find something that meets your criteria, you have the right at that stage to say, you know what, I'm in. And you won't have left home. You haven't had to bother with time off work or the rigorous effort involved, not to mention expense, of coming on a tour. So I think there are very great options for you to think about. And when you have given us the mandate and you're on one of these virtual tours, as you may have noticed from previous times, you'll get the video clips, you'll get the photos, you'll get the commentary. It's almost as good as being there. Not quite, but it's a close second. So anyway, that's given you food for thought. And I just want to emphasize once again what I said already on this call, is that when we're old and we're confined to some kind of a house where we're being looked after, we tend to look back on life and we don't regret the things we did that we shouldn't have done. What most people say at that stage that they regret is the things they could have done, but they just didn't because, well, they were too busy watching TV, or they had too many reasons why they should wait and just see what happens. They didn't want to be the guinea pig. They didn't, no, just it's better to make mistakes and learn from them than just to live a life where you never, ever make a mistake. Because if you never, take a risk, you never get anywhere. Anyway, there are my thoughts. Machiel, have there been any further questions that you think deserve an immediate answer?
Yeah, I think so. From my perspective, just some obvious questions. It's nice to just get these questions. What do we mean with the investment period of 5 years? What we mean is that we start the investment with the initial time horizon of 5 years on the commercial side, and then we give the opportunity to the actual investors in year 5 to decide if they would like to extend the investment period or they would like to get out. And so from that perspective, a lot of investors sometimes think that, why should I keep it in 5 years if it's such a good investor? I can just as well keep it a little bit longer. So we're very democratic in that regard. It's going to be set at 75% decision rate, and we have the opportunity to buy out the last 25 if they want to go out. Then there's a question that if somebody investor or have pledged pledge means that you have stated your interest on a certain deal on the portal. If you've done that for Medical 4, we will contact you and you have the opportunity to pledge again for Medical 5. It will not be automatic because we want obviously you to evaluate the deal again from scratch and then decide if that is what you want to do. So we will not automatically roll you over from Medical 4 to Medical 5. So I think that is that question. And then there's a question, can I invest in the Medical 5 equity? Of course you can. We're going to put the investment up pretty much in a week's or so time. How it works is during our testing and due diligence phase, we will put it in test mode, in pledge mode, like we did Medical 4. Once we are comfortable with the deal and we think there's no real big problems with the deal, then we'll change it over to investment mode. And that basically means then you have to be physically be able to transfer your money, and it will definitely become first come, first serve. So all I can tell you is don't delay. We had a phenomenal response so far, and all our deals has been sold out, and we actually have got a waiting list. So please, there's no limitations that an investor should be a South African. We can actually deal with pretty much everybody from around the world. Matter of fact, our Medical 1 deal had 35 investors, and we had 5 continents, investors from 5 continents on. I had one client from Afghanistan. I've got a client from Canada. We had one from Switzerland. So foreigners can definitely invest. So we do take care of that option. Let me just check what is the requirements. You will see when we do the deals on the platform, really the big requirements is that if you are coming on board, we really need to verify your identity, and we really need to verify yourself in terms of your passport or your ID book, as we call it in South Africa, and also your physical address. The main reason for this is that the Americans are very strict on the anti-money laundering rules, and we really just comply with that. It's not a big story, but that's what we need to do. All right, Dolf, I think most of the questions I've covered now. I think if there's some more questions, specific questions, please, Dolf has already given you the email info@Wealth Migrate. All of you on the platform, please, if you have any questions, just put them on our question box and we will get back to you. We will also record this. This webinar has been recorded, and we'll definitely send also out the link for that. Yeah, Dolf, I think it's time to sign off here from a fairly nice weather here in Cape Town, and on your side.
Yes, nice weather. It's always nice weather here. Blue sky, about 30 degrees today. And look, I want to thank you, Machiel. It's always a pleasure doing this with you. I look forward to us connecting again in Atlanta for the next buyer's trip. But most particularly, I want to thank you, the participant, the listener, for being on this call. You know, you're the reason why we do these. I'm very excited. I'm very bullish at the moment on the market here. And I think, you know, track record is good. And if you see what Wealth Migrate has done for its clients in the last couple of years, most of them are smiling. And I think all of them are smiling. So we look forward to seeing you either in reality or virtually on one of these virtual buyers tours. Again, thank you for your time. I know there are other things you could have been doing with it, so I hope it's been really worth your while. And Machiel, thank you very much, and also our production team on the call today, Kevin and Jason, thank you for your valuable input. And until next time, I will sign off by saying what I normally say, which is successful investing.